Hi all, welcome to my channel Green World Investors. Today we are going to talk about why SIPs are not always good. SIP or Systematic Investment Plan have become a common buzzword in the personal finance. SIPs are generally understood to be a regular investment in mutual funds or equities. It's become very common around you also. If you check within your family or your friends, I'm sure you would name 10 people standing who have started or are already invested into SIPs, either in mutual funds or stocks. So they have become very common in the Indian context. Most financial advisors suggest that SIPs are an essential investment tool for retail investors to meet their financial goals. SIPs are also advised for almost every situation or investor, regardless of their financial need, their age. It's just that SIP, just start an SIP. So while SIPs have a lot of advantages, they have also got downsides to them as well. One thing about SIPs that are not much talked about is that they will give subpar returns in an overvalued market. The returns of SIPs in the future cannot be extrapolated taking the past because the Indian markets have a limited history. There have been cases where stock markets have given flat to negative returns over a period of time. For instance, if you take the Japanese market from the 1989 to 2022, or the US market from the 1929 to 1945, and again from 2000 to 2008. So while I'm not saying that SIPs are entirely bad or they will give you bad returns in India, but it is a possibility that you must consider. SIPs they are not riskless. So like a government bond, you are assured of assured returns from a government bond, but that is not the case with an SIP. So you always need to diversify your asset allocation. Last year, the Indian market gave a return in the single digits, which was lower than most FDs and also the return that you might have got from your savings bank account. So a safe SIP is not only in equities but also across an entire asset class, which can range from gold or fixed deposits or real estate. It is not only that you can do an SIP for the equity market or stocks or mutual funds. You can do it across a vast range of assets, like I just mentioned, in gold, in real estate, or in fixed deposits. So blindly investing through SIPs is a sure shot formula for failure in an undervalued market. Even if you see, the real estate cycle has shown an upturn from the past years currently. The Indian markets are regularly getting around 10,000 to 12,000 crores every month in SIPs, right? So don't think that it is a good time for high equity allocation. You can also consider other assets for your investment purpose. If you check out fixed income, it seems to be more attractive. I hope you like my video. I've also shared my views on why you should diversify or why you should have a fixed deposit going into 2023. Why is it an attractive option to increase your portfolio allocation going in 2023? So please like my video if you did so, and Happy New Year.